So this came from a conversation about Maija not meeting the right investors, right? And so what we wanted to do, and also came from a conversation with Jaakko around how do family offices act like family offices? Are they sophisticated investors? Are they sheep like lots of other investors? How does that all play out? And what I wanted to do was capture this conversation where we brought a family office investor in. I'm sitting here with the VC hat on, and we're talking to a company around their journey. What are they trying to raise? Who are they meeting? And you can be polite or rude in terms of investors. How many of them are time wasters? How many of them are real intent? And then where does this story go? So it's this kind of inside an investor conversation. So it's not really a pitch. It's more of a discussion around fundraising. But let's start off by introducing yourself. So Maija, Chris, just do a quick intro of that and a little bit on the history of the company. And then we'll bring Jaakko in and then myself.
Yeah. All right, if I start. So my name is Maija. I'm the CEO and co-founder here at Onego. I'm a third-time founder. So my previous company, Golden Green, actually used to have their offices in here. So we made this pulled oats nyhtökaura product that was a big hit some time ago in Finland and also elsewhere. So we ended up selling that plant-based meat company to a bigger corporation. Also launched a product in the US with the Cisco, that is the biggest food distributor there. So it has been a very successful product. And then when I left that company, they contacted me from VTT, this technical research center, that there is a very promising idea and concept, but they sort of haven't figured out what exactly to do with that. And apparently there was a super brilliant, talented tech team of which nobody wanted to be the CEO.
Yeah. Hi, I'm Chris Landowski. I'm the co-founder and chief technology officer. And as Maija said, actually came from VTT earlier. I had worked there since 2008. And I was in industrial biotechnology, developing protein production systems. And I was doing a lot of enzyme development work and maybe it's also some pharmaceutical products. So then we decided to spin it off and create Onego. So this is where we are now 4 years later.
Fantastic. Jaakko, what about yourself?
I'm Jaakko. I work for the Onvest family office here in Helsinki. My background is more on the financial side. To cut long story short, I came back to Finland from New York in 2012. Joined Evli Bank, did the credit sales and trading there. Then I joined Hulko Family Office back in 2015. Was there for 6 years. Then I ran a Luxembourg ESG fund for 2 years. And then I did my obligatory stint in the startup community by being a portfolio manager for Cactus, which was making manufacturing, servicing, installing, financing these battery energy storage units. There for 2.5 years, and then now with the Onvest. And the that's it. Long story short.
Absolutely. And again, I think it's good. You've got the variety of backgrounds in terms of the finance side, but also you've got that startup. Because Cactus wasn't just a normal startup.
No,
right?
no.
Battery energy storage system. You also had a fund. Just explain a little bit about that.
Well, the idea was there that the keeping those batteries on the company's balance sheet was too burdensome. So we came up with the idea. Oskari Jaakkola, who was the CEO of the Cactus, came up with the idea, and I was part of the execution team on it, that we raised 35 million equity and 35 credit. And we used that to finance those battery energy storage units for the customer. So basically the customer buys a 10-year lease, and we do all the maintenance and upkeep, and also the connection to the marketplace where you can go into these so-called electricity markets and earn with your battery during those 10 years.
Okay, this is good. So we're going to have a great conversation. Let's start at the top, right? So from a Sparkmind.Capital perspective, we have this Protect Europe thesis, right? So it's very, very simple. It's the fact that globalization has kind of swung back the other way, right? So US presidents want to invade Greenland or Iceland, depending on, turn of phrase. Russia's trying to kill us, and effectively China's doing their own thing, but China doing their own thing has also disruptive powers across the world because of the size and the automation of their economy. So the question is how do you then protect Europe? And then when you look at the big things, food, borders, space, etc., energy, how do you actually manage that? So that's the kind of the overwrap for me, which is looking at sectors like this and then really trying to understand the sector through how a company then gets to scale, gets funding, and becomes the category leader in that space. So if we look at Onego Bio, and I'm going to simplify for Jaakko because he's only just walked into the building, right? And it's not because he doesn't need to complicate it, it's just a simple thing. So you guys are basically producing a hedge on the egg market, right? You're creating a amino acid kind of substance that effectively is an equivalent to eggs, but without lots of chickens involved, right? So it's kind of fungi produces this hugely scalable egg protein. What you're doing is you're basically producing that at volume in quantity, which allows you to enter the American market particularly, and allows you to enter the kind of baked goods market. So people should think about pancake mixes and brownie mixes, and I'm going to say biscuit mixes, but I'll say cookie mixes as well because Chris is in the room.
Yeah.
So we're looking at those sort of stuff. So we're not talking so much about putting stuff on people's plates directly, omelets, and that can happen. But we are looking at that baked goods markets. Now, that's the kind of overview. Now, why does the egg market need hedging? Right? So at the moment, we're thinking the market's huge. It's what, 300 billion?
Yeah, it's astonishing. It's even difficult to think about a number like that. And yes, the industrial eggs are about 1/3 of that market. So even just industrial egg is just gigantic as market. And it's surprisingly fragile. I mean, if you think about that, it's really the world's most popular protein. And still it's so easily impacted by avian flu and salmonella. And it has a huge environmental footprint. So if you think about that, there's basically just a couple of days buffer against any of these disruptions globally, and it's only single source. So what we're seeing is that it's just balancing the egg market. We're not trying to kick out any egg farmer or just change people's habits. We're just second sourcing the industrial egg. And that's because it's a drop-in replacement. It basically happens very easily. You just have one powder instead of another powder, and that's it.
Yeah, because the biomanufacturing system that we're using for this, it doesn't get sick, it doesn't get tired, doesn't need the day off. It's just cultivating and producing product all the time. And we can just basically, like Maija said, buffer the supply because it's still, our scale is much smaller than the gigantic egg scale that exists, but our product is a powder, directly a powder, so you can also store it. It can be there for several years in storage. If there's a catastrophe in the egg market, it can be released in alleviating some of the burden of egg shortage, for instance. So actually it can be used as a hedge in that way too, as a supply buffering product in a way.
And look, this all makes sense because effectively any startup founding team is looking for a massive addressable market. This is a big market, right? Hundreds of billions in there. We're looking for something that's never going to go out of fashion. That's humans for a while are going to continue to eat. I think we've all woken up to the fragility of our supply chains, like COVID, Ukraine war, etc. We've seen these price shocks. You've seen the shops shelves bare, which we didn't think we were going to go through. We've worked out that last mile supply, last minute supply also has its downsides. Okay, so we've got a massive addressable market. We have a scientific solution that's come out from an expert team from effectively a well-known kind of national lab type institution for people who aren't familiar with VTT. And now let's talk about your 4-year journey to market. So effectively, when you started this company 4 years ago, how much money have you raised so far? And in kind of what tranches? And let's talk about which was no fundraising round is easy, but some are harder than others, right? So let's talk about that kind of first up to now journey.
Yeah, we started the company in a quite interesting way by having 10 million on the bank account. So the day one.
Oh my gosh.
Yeah.
Like, this is how
we didn't even have a bank account yet. Hold on, wait.
Other than Google, they've got to check before incorporation.
And then we didn't even have the company incorporated yet.
Yeah, exactly. But the thing was that we were were negotiating with the investors and the VTT at the same time that, okay, if you give us the money, we will bring the tech. And if you give us the tech, we will bring the money. Because VTT was also trying and testing us. They wanted to make sure that, this is such a crown jewel technology. They're not going to give that to anyone. It needs to be a pretty awesome team and show their capabilities. So by bringing this 10 million, we were able to show that, okay, this is the right team to give this tech to, and have to say that they couldn't be any better tech leader than Chris, because this is like he's really the number one specialist, or max number 3, I would say maybe, but I would still say number one. So yeah, we were negotiating that, so that was our seed round, the 10 million.
Okay, so who came in the seed round?
We have two VCs, Maki and Agronomics. So Maki from Finland and Agronomics from UK.
Okay.
Yeah, and you actually have like a small part for the family office holdings as well.
Okay.
So they're also in there. And then we were running for a couple of years with that. Yeah, of course, one very, very important thing we always say that as founders, it's our responsibility to then bring in the non-dilutive funding.
Yep.
That is not just, okay, investors, just give us more, but it's more like we know that there's so much money available, and that's also a work that needs to start day one. So it's not something that, okay, when you desperately need something and there's no VC money available, then you suddenly start going for Business Finland or European Union or whoever. We started that like immediately, day one to build this project. And these really are projects that totally make sense. It's like you're just bringing capabilities for something that didn't exist. And it's like bringing this core IP. This, by the way, is something to talk about as well, that keeping the IP in your home market is totally crucial. So that was the seed round, 10 million equity, 5 million non-dilutive. Then we continued the same way. So Series A, we brought in 30 million equity. So then we had Nordic Ninja as the lead investor, and then we had Grupo Bimbo, who is who is the biggest bakery in the world. Then we have Tessi, also from Finland. We have few strategic partners as well, and then of course the existing investors. And again, we brought half of that as non-dilutive. So we brought in 15 million as non-dilutive from European Union, Department of Defense in the US, and also Business Finland again wanted to support us with this piloting. So we see that readiness has just brought in so much more than just money, because everything is so structured. Everything is we actually see that there's even a benefit from having this kind of project structure, that you really need to follow the steps that you planned for yourself and keep the good pace. So
on the process, did you basically do all the investment tours, regardless that you had these strong investors in? Did you reach out for broader audience?
It's so much about finding the right match, and you usually know the right match when you see it. And actually, I have to say that the advice from Chris has been one of the most crucial for me as a CEO, because many people always think that just more elbows, just push harder. But he said once so nicely that, let's pick investors who really want to join us.
Sure.
And I think it's so nice, because you immediately feel it, that it's not that you're trying to push and you're trying to force someone. You're just trying to give better reasons why yes and so on, but more like you find the match, the doors start opening.
It's like they were as excited about it as we are. And I was like, wow, these guys like this even more than us. We got to get these guys in here,
we want you.
But I wanted to pick up one thread before we lose it. So non-dilutive capital. And again, I think this is a really interesting thing, because a lot of investors worry about capital intensity in a particular business. And they look at a business like Microsoft and they're like, wow, fantastic. We put 20 million in and it grows to this insane scale and there's not much capital intensity. And there wasn't in Microsoft early days. But look at Microsoft's data room rollout today. This is not a capital light business. Now they have the balance sheet to cope with it. Now, I think it's really interesting. If you look at various founder superpowers, actually one of them that is, I think, understated is your ability to raise non-dilutive capital. Right? To actually see, okay, this can't just all be equity coming out of me. If I'm going to build a factory in Wisconsin or somewhere else in the States, that we actually have to leverage other people's money, not just shareholder money, to basically do that. So has your approach to non-dilutive, you've said you did it from day one, which I love, but was there a different approach or was it just the same approach? I'm just interested to see if there was any variation for you. And there doesn't have to be. I'm just curious.
Well, I think that one thing I can comment about more generally is that we're just happen to be lucky that we are in Europe as a startup, because I realize, or in Finland even as a startup, because I see some of my the American startups, and there's really no option for non-dilutive money. Like the states are not giving them money just for grants. That doesn't exist. But Finland does, and the EU has been very supportive of the new technologies to make sure that there's a lot of new stuff going on, and supporting. Definitely, I felt really well supported, and I see that in other countries as well, in France and other startups that are there. They get a lot of non-dilutive support from the governments to get them going. So I really think we're also in the right place at the right time, because I think the EU has been really, really strongly behind this idea. And so that has, of course, pushed it forward. And then once we realized that this is going really well, we just kept looking for more opportunities. It sort of like snowballs after a while.
Yeah, and at the same time, I mean, the quality of your applications is very much coming from the fact that you actually have practiced that.
Yeah.
I mean, some of these U.S. government projects where we got money, we got like so great feedback. They were like, "Oh, bravo on your models and bravo on your like applications, and oh wow, yours is really like raising the bar for everyone else." It's like, well, could it be actually that we have done this a few times already, that we know exactly how you're supposed to formulate this so that the audience understands, that they know what you're up to, and you're not just inventing some sort of kind of like fake work packages. No, these are real. You're actually doing this. And like reporting is a no-brainer because, anyways, you do your work. So this, I would say that actually it has been a gift for us because, now we can just repeat that.
May I ask a question? Maybe if I can frame my question first, is that when you think about the food industry, and in Finland particularly, you have Raisio and you have Valio, for example, who have kind of like protected their case against the oat drinks.
Mm-hmm.
Wouldn't they have basically all these skill sets that you described as a investor? They would be hedging their own businesses, like Raisio, for example, they produce flour, lots of baking goods related stuff. And also with the oat drinks, and also on the Valio side, also their milk products are in a baking process quite heavily established. Did you encounter anything, or did you even approach these sort of potential investors or industries?
We didn't start from Finland for obvious reasons because this EU regulatory approvals are going to take a lot of time, and this is maybe one thing that, related to what you were talking in the beginning about the future of this area. It is just what it is. That there's no way to just give a very quick shortcut or fix to this situation. The novel food regulation just is extremely slow and stiff. So that's just what it is. It's going to take many years before any novel food can enter the European market.
The investment arms, like for example, Valio has their own pension fund.
Yeah.
They could have invested probably, I guess, with high likelihood. Yeah. And also Raisio, it's not like if the end product is basically approved, it's kind of like having the data, having the innovation on their portfolio. Like for example, Oatly, most of the stuff what they sell in US, and it's an oat drink, and it's not. They didn't get the company going for Swedish market.
Yeah, maybe what I was just trying to explain is that quite often, that kind of investors. I'm not talking about these particular ones that you mentioned, but just saying that usually they would also rely on their own R&D teams to first have studied the product and just like, okay, that we see that there is a place for this in our portfolio. That then it makes sense to invest in that, because if the answer is that, okay, yes, but in many years, then that could be that, okay, come back, when you're somewhere closer, or that then it's a pure IP play, that we just want to be part of something that is happening overseas, somewhere in the US or so. But I mean, of course, it's a completely different game when we're talking to, let's say, some of these world's largest food manufacturers who also have their CVC arms who are just capable of like directly commercializing this, like starting next year. So, yeah, I mean, that's maybe one of the core questions that, like, is that the slowing factor that the product product is not ready to sell in your own geography because of the legislation that we happen to have in here, that the novel food approvals take a lot of time, versus that, okay, we don't mind because we see that this is anyways the future of food production, regardless of any legislation. Someone needs to own the IP for that, and let's go with it.
Okay. Just explain the novel food thing.
Yeah, it just means that foods that are not being used, was it like year before 1997 or so, that like it's like these are foods that are just like you introduce either a new way of manufacturing a common ingredient or a new ingredient that nobody has been eating before. So it's a process of just making sure that it's safe for the consumers.
Okay, and America doesn't have that. It's just FDA.
Oh, absolutely, they have it. Yeah.
They have a little bit different system. So in EU for the EFSA, they basically go through this novel food approval process, but then the EFSA actually guarantees it for the population that this is safe. We say it's safe.
They rewrite the law basically every time.
Yeah, every time.
Okay.
So in a way, they're guaranteeing it. But in the United States, a company like us or another company comes there with a safety dossier and shows that it's safe. This is what we have. And they just say, okay, we don't have any questions about this. We don't approve it. Egg protein's an egg protein, so it's a very well-known product. So there's nothing really like unknown about that. So there's nothing mystical. So that way it's pretty easy. We actually went through that process very fast with the FDA.
Yeah, and to be really honest, I mean, this platform that you're using, this fungus that has been used for food manufacturing since 1990s or so.
Yeah, exactly. So there's a well-known organism production host and the egg protein. So it went really quickly with the FDA, I have to say. But that's a good process because they're really iterative. So if they have a question, they will call you and say, hey, can you answer this question? It happens really fast. But in the European system, it goes on a long time and you might not know. And they might come back in 3 years and say, hey, you have to do an animal study. Okay. So then you start again. So the whole process is probably a little bit bureaucratic. And maybe they do have a lot of work to do. And maybe that's why. But they're hopefully going to speed that up. And that will be very good because idea is that if we are in Europe producing a technology and a product, and then we have a hard time getting it on market, that's problematic, right? In some senses. And then these companies are going to move to the United States and start doing things there. So, they're very good at incentivizing investment and getting startups going, but you have to get to that last mile of getting products approved. And, I think they know about it, but there's a very bureaucratic thing to change.
That's a very important point then, because otherwise, if we're world-class at regulation, but not regulation that actually gets things to market safely, that's not good as well. Let's look at what is the big vision for the company. So how big can this company go in terms of revenues in like a 20-year period? So let's have an understanding of what could this company be doing in 20 years when you've got full-scale production and you're a big hedge on the market. Then let's look at what capital is going to be required to execute against that vision. And then let's look at effectively then almost like the people and the places you're going to need to operate. Okay, so let's do big picture first. Mm-hmm. So where could you be in 20 years' time?
Yeah. So we see that the nice thing about this egg protein, like we we're just talking in the beginning, it's not going anywhere. The food manufacturers apparently can't go without it. So they were trying very hard, when the avian flu has been there, everybody has been trying and testing all kinds of possible egg alternatives, but they just don't deliver the functionalities. We were just tasting the famous omelettes and everything. So that's it's a tricky one. So anyways, well, I mean, Mexico and Japan are the markets where egg consumption are highest. So it also proves something about that, it's like on the opposite sides of the planet. So how we say is that we first need to prove this one flagship manufacturing unit that is going to be in Wisconsin. Yep. We prove that, yes, it works. Yes, you can have your real, it's almost like a real factory farm that you really don't need any animals anymore. It's just the tanks delivering the perfect protein in a very, very efficient manner. So you have that flagship unit, and then you can start replicating that in the strategic locations around the world. So that's our plan, to almost like hyperscale it so that the company operates what is needed and that the partners operates operate what is available. So let's say you're in different areas in the world, you can have different partners, you can even have like different feedstocks. So this fungus that we have, it eats sugar, so the sugar can come from many different sources.
Okay.
So you can always have like strategic partnership, strategic ownership, strategic feedstock, and so on and so on. But we really see that this needs to be manufactured, otherwise there's no future.
So are we looking then, and just so I'm clear, at like 4 or 5 plants, mega plants across the world, or are you thinking 50 plants across the world?
Yeah, I think it can be ultimately like tens of plants. But then, of course, the question is that how big and centralized you make them.
Sure.
But at the same time, I mean, yes, this powdered egg, it transports very easily. So you don't really need to have these fresh produce dilemmas where logistics is a big question and so on.
Okay, and then how big revenue-wise could you get to? So are we talking about getting to 100? Oh,
it was 100 billion, don't you remember?
Yeah, no, that's fine. But is that 100 billion to you guys? Yeah. Let's that. So it's 100 billion. We're going to basically supply everything in the kind of baked goods market for the world. But hold on, was the 300 billion global or US?
300 billion was the global egg market, and 100 billion is the global industrial.
Fine. So we're going to basically replace that.
Yeah, we can replace that, but then of course it's going to happen in stages, and not all of that is going to be replaced. But like we see that it really can be balancing the peaks, the price peaks.
And look, also there's a huge advantage of its industrial scale now, but also this could go into other areas in the future in terms of the more, what are we calling it, the non-industrial part of the egg market. It can expand.
But then would you own those plants then, or would those be owned by somebody else? Or?
No, that's exactly what I was trying to say, that like this is really in our plans that we would just first prove this one unit, and then after that we will start looking at different partnerships that whether we make JVs or we license it to some local player or we actually operate in some markets where we see that it makes sense. But it's more like just look at case by case. But then there's another angle in this big picture, and Chris will tell you more about that, which is that this platform play, that it's super interesting that this trichoderma is such a capable fungus.
Yeah, so of course we're focused on the ovalbumin egg protein right now, but of course this is just one product of many. So if we find that we want to produce sweet protein or a milk protein or, I don't know, an enzyme of some sort, we can also do that. However, of course, we'd rather try to find some partnerships on that, because obviously you start producing a new product, that means you need another plant, manufacturing plant. So you start to get a lot of work. So it's better to get the technology out there, to find a partner that says, look, I want to license the technology. I will build my own factory for it, and on and on. So we can try to multiply that with different partnerships around the world to just try to get the technology and the products out there. And we can't possibly, afford to build all the factories in the world for every product. So it makes more sense to leverage partnerships and licensing possibly with a technology platform, because it produces already now, mostly enzymes in the world. So in Finland, there's actually 2 different companies leveraging that expression platform, making mostly enzymes for food and feed manufacturing. But we could consider all kinds of those, of course, enzymes, but mostly food products would probably be interesting. There's so many possibilities.
We do, of course, want to build this in a SPV model, that it's not possible to start just like expanding the Onego Topco. So the Topco is more like for owning the IP, ensuring the R&D progress is made and all the capabilities are there. But then who owns the factories, who operates the factories, who owns the walls, who owns the machines, those are always it just like you just make the financial arrangements. But this is a big size factory, so it's going to cost like 200 million or so. It's still less than producing the same capacity with chickens. It's going to be like 30 to 50% less like a capital that is needed for that. But yes, of course, financing the factories, we don't want to do that with equity. It needs to be this is a very governmental problem as well. So there's like a lot of governmental resources available for things like that. But then also just seeing like, after this first flagship unit, we see that it can be actually also done with debt financing, because this is a commodity product. There's certainly a market for that.
How about then? Do you see any market there on the second-hand manufacturing facilities? Like you could get a existing factory to basically like make it yours.
Yeah, I mean, there are some opportunities like that, and there used to be like a lot of places around, let's say, that we're doing before biofuels, for instance. There are kind of similar facilities where they have big bioreactors. They were out making ethanol before, and at some point, kind of the boom of that went kind of down. But there are these big plants around in Europe, I think, and also in the United States that would be a potential brownfield opportunity to develop. Of course, it needs to be outfitted a little bit different with a little bit different infrastructure inside, but it's at least would be a start. So yeah, that would certainly be a possibility to look at different options in that case. But yeah, it's one of those things that still requires sometimes even more planning, because usually when you build a whole new place, you can do it exactly the way you want it and that works. But sometimes making something old into something new, it takes more planning. So yeah, but we'll also look into all these different options. Certainly wouldn't be a problem to retrofit something if it were available at the right price or with the right partnership.
But anyways, the funding from this round also, we're now in the middle of the Series B. So after this, we don't see that the Topco necessarily needs any funding anymore.
What are the investors that you're looking for? So let's describe who is the perfect investor. So that's very clear and be very specific.
Yeah. We are really using biology to solve the world's biggest problems. So we would want to have allies to join that journey. So builders, people with patient money and understanding that you are building something, not just some quick wins, but more like steady, sturdy steps forward, one after one.
And we're talking about biology and manufacturing. These things take a little bit more time. It's not an AI app or it's not something you can do quickly. So, some of the cycles of time people expect, okay, you're going to get results in this year and it's going to be ready to manufacture, right? And you're like, yeah, okay, we could try. But it's something more established that it takes a bit more time. And it's good to have a patient investor that has longer time frames to think about that. Let's make progress and that's more important than how fast can you do it. I mean, we're doing it at really good speed. I mean, we are a spin-off, so we already got that first part out of the way, being very advanced from the go. But, when you start now, we're thinking about manufacturing and doing this stuff. It just takes a little bit of time to...
No, you need a particular type of investor.
Yes.
And again, it's the I can see the later stage investors really simple. Like you are a slam dunk for someone like Baillie Gifford in the UK. Like this is patient capital. Decades, not quarters.
Yes.
Right? They never sell or hardly ever sell.
Yeah.
Right? And so that is your kind of Series C, Series D investor. Right? They come in with 80 plus million and they ramp up from there. So they're looking at companies that generally are generating about 150 to 200 million in revenue. And then they come in and they've got big pockets. They've got 280 billion assets under management, right? So I can see that investor. The challenge is the question around, do we see the investors that are going to get you from this Series B to that kind of Series D? Right. And look for those sort of investors that are not necessarily Baillie Gifford decades, Ice Age timelines, but are definitely in this kind of sweeter spot. Where are you seeing the traction from those? You don't have to name names, but are you seeing those people come forward or are you just meeting more? I used to invest in B2B SaaS, but now I don't.
Yeah, we actually thanks for the advice, because we actually have been meeting a lot of this much more suitable large family offices who are really seeing this big picture. So that is happening now. And we also see that, one big trend now is that people are starting to see food more as material. That is not so, you need to be in the food business in order to understand this. It's not all of, somebody who has been branding different, fast-moving consumer goods for 50 years. But it also could be just something that, is material, that is flowing. And, material, you need to think about the supply chain. You look at the sustainability. And, of course, you look at the cost.
Okay. Yeah, look, maybe a topic for another time. Branding food tech as food tech probably didn't actually help, right? Because actually it's biology meets manufacturing is probably a better framing for this. Jaakko, final words from a kind of family office perspective. When you look at a business like that, what are you thinking?
I think things are working well on your side. Like Maija's background on like serial entrepreneur on this and with successful exits on the back, and then Chris is on the VTT side. There's science, there's ambition. I see clearly that you guys are passionate about this, but at the same time, congratulations on the investor list that you have already so far. And maybe on the financing side, I would kind of like to see maybe some other alternative options for financing the factory. Don't take it on your own balance sheet. Try to get a way around that.
Yep.
It would look too top heavy on it. But fantastic story. I thanks, Colin, for having me on board on this thing.
Now, again, this is one of the things we want to do is we want to bring you inside the conversation, both between startups and investors, because this is the bit that people don't get to see.
I also want to say some final words. I also think that it's a really great example that you immediately got the point or you got the idea and just tells that, like, it's not about these like different industries, insights or something like that matters. It's more like looking at the case from outside and seeing big picture. It's not that complex. You can immediately start understanding, and like just based on the comments, you absolutely did.
Yeah, thank you.